Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Tuesday, September 18th, 2007. The market's closed, and obviously we had a great day on Wall Street today. The S&P 500 finished with a gain of $4.30. That's 2.5%. And all the people who have maintained their bullish stance in this market, congratulations. As you know, I've been more neutral in here and been basically waiting for some kind of catalyst. Today we got that catalyst. The market made it above the 150 level, and I think that's going to prove to be the important level going forward. So we had huge volume in here today, and anyone who's been short obviously felt the big pain here today, and they provided the a lot of the fuel for the upside. So it's been a great trading environment, but now it looks like the buyers are back in control once again. So but where does that leave us? On an intraday time frame, it leaves us very extended here. You can see that on Monday we had that pullback to the rising 5-day moving average. The market held up. We had some initial strength early this morning off some earnings reports, and then when the Federal Reserve cut interest rates by 50 basis points, which was not what most people were expecting, the market responded very favorably here, obviously. So we've got the buyers back in control of an extended market, looking for pullbacks down towards that 150 level over the coming few days. But I wouldn't be surprised to see a little bit more squeezage higher of those shorts. So the market's in an uptrend. That's how you've got to look at it now. We clearly have that answer, and it looks like the inverted head and shoulders pattern that we had looked at now should come to fruition, and I wouldn't be surprised to see new highs in this market. And that's just the way it's looking right now. So let's take a look at the semiconductors. The semiconductors had a good day as well. They're still probably the worst looking group there is out there, but they were back up above this area of the neckline that we had looked at after two bad days from Friday and yesterday and Monday. So the 10-minute time frame though is showing that there are still buyers around. We still got a 5-day moving average that's declining, so I wouldn't be surprised to see some backing and filling in this area. Perhaps a retest of that 37.40 level. That had been the prior level of support, and I've been saying that the market, if we're going to take it seriously on the long side, it's got to at least get above that 37.40. So let's hope that maybe we get a little bit more of a move higher and then come back and test that 37.40. And if that holds, then things might be clearing up a little bit in the semiconductors as well. The most impressive action today, I think, was in the IWM. It was up 4% with its $3 gain. And not only did it move past that $78 level that I've been talking about right in here, saying that it needed to get above there to be bullish. It cleared that very convincingly, and then continued to move higher and got back above that 200-day moving average for the first time since this sell-off really began back in late July. So let's look to see if this 80 area can now hold a support. It's going to be a very important level continuing to go forward. We've still got a declining 50-day moving average, so that might indicate to me that we've got a little bit further backing and filling in here to do before the market can really move higher. But we do have on this weekly time frame, we now have a higher high to accompany this higher low. So things are looking a lot better right now, and the NASDAQ 100 has been the most bullish. I've got some bad data in here that had a bad print, I guess, that we came across early on after the Fed announcement, and they haven't been able to clear that up yet. Hopefully they will. But the this has been the strongest group. This head and shoulders pattern had held as the neckline tested here. That's what we've been focusing on, that with these higher lows, and holding above the 50-day moving average today. It convincingly broke back above this level here that I had been outlining for the last few days of $49.40. I've been saying that it needs to get back above $49.40 for the long side to be taken seriously. That's what we saw today. So now, I think that any pullback ought to be contained by that $49.40 level. Buyers are back in control, and it's looking like we've got some more clarity to this market now.